Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices sharply higher after a very mixed week, down week albeit, but it was a mixed week. And today we come in and gold prices are up significantly. Last week, don't forget, we got down about 1309 in the April contract, not quite to 1300, which would have been the real support test, but we did bounce and we're trading upwards of 1325 right now. I think that opens the door back to a trade all the way up to 1350. It's not going to happen overnight, although with gold you never know. But I think technically once we get above 1325, we're going back into that old range. And then from there, we'll kind of take a little bit of ebb and flow, whether it's news, whether it's positioning, whether it is fear. There's a lot of reasons why gold trades the way it does these days, but that's the technical view I'm looking at right now, is that we're sort of out of this bearish momentum, bearish mode, and we're going back into neutral. We need to get above 1350 to start talking about being bullish, uber bullish again. And the dollar on the flip side didn't really have an effect on gold today. Dollar, while it was a little bit lower, stayed within the range. We didn't see a dollar sell-off that would have aided and abetted any rally in the gold. So the dollar kind of holding its sustaining at higher levels, which, you know, gold and the dollar have done this before, where they kind of go their own separate ways and then they meet back up again later once one gets out of whack. And right now it just seems the dollar holding in that upper end of the range that we've seen over the last couple of weeks. And then likewise the gold also making a bullish move higher. So gold and dollar in tandem, not necessarily trading higher together, but not really affecting the trade today. And lastly, let's look at that positioning. Last week, as expected, we did see some spec longs get out. Not a huge amount, but we did see the positioning shift a little bit, probably as we got towards that 1300 level. Now, I think you're starting to see spec longs perhaps get back in as uncertainty is on the rise again. We've got key inflation numbers this week. Likewise, we've got a new Fed chair. We've got a Fed chair giving his testimony to Congress the third week of February. And then you've also got March FOMC just right around the corner. So a lot of reasons why you probably want to own gold, most likely as defense. But as we saw last week, gold doesn't always act the way you think it will, with stocks selling off the way they did and gold not rallying. So I think right now you're starting to see maybe a little bit of gold coming out of the darkness here, out of that negativeness, out of that downward momentum, getting back to neutral. We need to trade up, a significant one at that, up to 1350 before I really start getting bullish again, gold. But right now, it seems we're on that pace. This is Todd Colvin coming to you from the floor of the CME Group.